Today on the podcast, it is our first stock trade and investment podcast of 2024. So you know what that means. My man O is going to bring y'all some stock trade and investment tips for you to use, whether you have a whole lot of money, a little bit of money, whatever you got. Buckle up because it is a new year and we are going to do it right with our stock trade and investment podcast. Fair Money Podcast starts right about now.
Get your mind right. Get your mind right.
It's a brave mind.
Ladies and gentlemen, welcome to the Fair Money Podcast. This is your boy Simbawa Nibaye Jr., aka TK, along with my man Omar Williams. We call him O. The these Obies got the night off today. Omar, say what's up to the peeps.
What's up, good people?
It is another lovely Wednesday morning, and y'all know how we do. We jump right in and get things started. But before we do, it is Affirmation Wednesday, and y'all know how we do is get your affirmations in and out the way. And so before we get things started, we're going to do that so that way we can make sure that we get your day started off right. So if you got it written down anywhere, if you have them memorized or whatever you got, let's get the day started with these affirmations. Are you ready? Let's go. Today will be a good day. Today will be a great day. Today will be an awesome day. Today will be an amazing day. Today will be a phenomenal day. Today will be stress-free. Today will be a stress-less day. Today, I will overcome all barriers that want to block my progress. Today, all circumstances, issues, and situations will work in my favor. Today, I will become better than who I was yesterday. I am a go-getter. I am victorious. I am triumphant. I am an overcomer. I never lose. I either win or I learn. I take authority over this day. I will dominate this day. I will conquer this day. And everything I have spoken into this day will happen as I have affirmed, because I am more than a conqueror. Let's get it started. So today is our first stock trade and investment podcast of 2024. And without any further ado, I am going to step to the side and let my man O have the floor for the remainder of the podcast. So get your pen, paper, tablet out, whatever you need, because it is drop knowledge time here on the Fair Money Podcast with my man Omar Williams. My man, take it away. You're on mute, brother. You're on mute.
Good morning, good people. And
There we go. There we go.
There we go. There we go. Good morning, good people. It's 2024, and tonight we are going to talk about, like I know it says stock trade and invest, but tonight is going to be the traders are going to like tonight. The investors, you could benefit from tonight, but the traders are really going to like tonight. So tonight we're going to talk about market structure. And what that is, as you can see, this picture here up on the screen is an example of market structure. So let's begin. What is market structure in trading? Market structure gives us a bias for trading opportunities, okay? In a bull market, which means to go up, we always look to buy when it comes down. And in a range market, which I'll get into, we'll look at the buy at the or sell at the high, buy at the lows. Okay, so market structure just lets us know what we want to do in a particular trade or investment, mainly a trade, what direction we want to go in and where to buy it at, okay? There's principles of the market structure, okay? Price moves within a structural of support and resistance. If you could check here, for my audio listeners, I suggest you go to YouTube when you check this one out, but you should get something too for the audio listeners. So if you look at the picture here, price moves within support and resistance. So there's the red lines for resistance, the green lines for support. Okay. A breakout, if you can see here, a breakout of the structural of support or resistance will lead to price movement in the next area of support and resistance. Okay, so if it's I'm gonna start. If you see my cursor here, I'm starting to go up, then down, then up, then down. That creates a structure. Then it goes up a little again, and then it breaks through the bottom of the structure that was created. That means price is now going down in a downtrend, and it starts the process over again. Okay, so I'm gonna read that one more time. A breakout. Okay, a breakout of the structure of support or resistance will lead to price movement in the next area of support and resistance. Okay, so as we can see here, this is just a diagram of how price moves. They call this like a zigzag pattern. Okay, so starting here, up, down, up, down, up, down, break through this support here. Okay, down, up again, down, up to the resistance level here, down, back to new support, up again, down again. Now, if we see this chart below, is actually how it looks on a real chart. You get the down push, up push into resistance, down push, up into resistance again, chop, 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 back through the resistance, going up again, back down to support. I'm getting ahead of myself, but just keep this in mind. Okay, just keep in mind, markets move in structure. So it doesn't matter what the news says, it doesn't matter what anything happens, markets will still follow this structure. Even if it tanks, if it crashes, if it goes super high, markets will follow a structure. Okay. And if it's at a place now, like so for instance, we were at all-time highs in the stock market a couple weeks back or a week ago. Okay. We got to all-time highs, then it came back down. And what it is the market is now, since it's never been here before, it's rare air, it's trying to create new structure at these highs. Okay. So let's continue. So the elements of market structure, there's phases and then there's trends. Okay. We're going to talk about these phases. How do the markets really work? All financial markets, okay, work on the universal law of supply and demand. Now, where you see resistance at, that's supply. Where you see support, that's demand. Okay. The law of demand means the higher the price of an item, the fewer the demand. So what that means, so okay, buyers don't want to buy at high prices. We know this from just everyday living, right? We don't want to buy at high prices. And lower the price, higher the demand. So when prices go down, if there's a sale in the supermarket, if there's a sale at any store we like to go to, it creates demand. People like to go shopping. Now, the law of supply is the opposite. The higher the price of an item, the higher the supply. Sellers want to sell at higher prices. And at lower prices, the lower supply, sellers don't want to supply at lower prices. So if the prices are low and may say they bought it at a higher price, they're not trying to sell it at lower prices. Okay, so lower the prices, and it all depends on where you get in at on the market. So we'll just say $10. Say you bought at $10. Say I sell at $10. If I sell at $10, I probably bought it at $9. Okay. If I bought it at 11, I probably don't want to sell it at 10. I want to sell it at 12. So it's a fluid thing here. It goes in and out. Okay. Next. So prices. So this is how price moves. So this is why the traders will love tonight. Price only moves up and down because it's looking for buyers and looking for sellers. So if a price spikes from $10 to 20 in a matter of a minute, that means there was nobody willing to sell it in between 10 and 20. So it's just looking for buyers and sellers, looking for buyers and sellers. Okay. So now what do you think the smart money does? Well, Smart money is nothing but professional money, big hedge funds and institutions like the big banks. Okay. If you want to be a successful trader, you have to understand where the smart money place themselves and where the orders are. Okay. So let me go back to this picture. If you were buying down here at this support, where do you think the smart money would be? Well, underneath here. Okay. Because they're accumulating down here to go up. I'm getting ahead of myself. Okay. So if you don't want to get trapped in this, you don't want to buy. You don't want to buy up here. You want to buy down here. Usually what happens is we buy up here and then we want to get out quickly. And then we wonder why we losing our trades. It's because we're not sure where we are in the market and what time frame we're in. Okay. So there's four phases of this thing here that you're looking at on this screen. One is accumulation. 2 is an uptrend. 3 is distribution. And 4 is a downtrend. All of that's in here. We'll get into it. Accumulation means removing the supply of a stock by buying. Okay. So when you're accumulating, you're buying it at the bottom. So you're buying up all the supply, or it's a lot of demand. So you're buying it all up, removing the supply of a stock. Okay. And there's no demand demand gradually comes in to overcome and absorb the supply to support the stock at that level. That's how you get support. Okay. Now, how smart money do it? They buy as much of the stock as possible without significantly putting the price up against their own, buying until there are few or no more shares available at that price. That's why price continues to go up. They'll take all the sell orders at a price to get it to go up. They'll take all the next level up and they'll continue to raise it. Again, they have the big bucks to do this. We don't. We got to catch the ride. Okay. Accumulation generally takes place within a well-defined congestion area. Now, if you don't know what a congestion area is, look at my cursor. It's right here. It's when price is going back and forth, back and forth, back and forth in a small range. That's congestion for people who didn't know. Okay. The smart money ensures that the stock is contained below a certain upper level, which is right here. Okay. And at the same time, smart money also supports the price above a certain lower line, which is right here. Okay. Now, how do trends change? Trends change. Now let's go to another picture. Okay. How do trends change? Trends change by the action stops. There's a change of character. It's a testing of the supply or a markup if there's no supply found. So we talked about some of this stuff. So this is another diagram here. When you see lower lows, which is represented by the LL, 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 when lower lows keep going lower, you are in a downtrend. Okay. When lower highs keep going lower, you are also in a downtrend. Now, this congestion or range area that they're talking about is usually when you see your lower low go up to a lower high. Okay. Now we're at the bottom of the trend. Okay. What happens is you get an equal high, as we can see here, this EH, and you get equal lows. That usually means it's not guaranteed because nothing is guaranteed, but it's market structure. Okay. Usually when you start seeing equal highs and equal lows, you're in a range. Now, whichever way you break out from this range, it's a change of character. This was a down character. Now the change of character is when it breaks this equal high here, breaking through that upper line, which changes the character. And now we're in an uptrend. And an uptrend is higher high, see the HH, and higher lows, HL, HL. And when we know where we are on the bigger picture and we bring it down to the lower time frames, we can kind of know where we want to buy or sell. Okay. Okay. Now here's this diagram on an actual real chart. There's a markdown trend, candlesticks down, candlesticks down, candlesticks down. Now it reaches the bottom of for accumulation. Again, what did I say? Accumulation is where the big banks start buying up all the supply at that area. They're buying it up. Here, I'll take it. Prices are cheap. Prices are cheap. What are we doing here? We're panicking and thinking that the market is is going down forever, and then you're not realizing that it actually stopped. Right? They're actually starting to buy there, and again, they leave clues because they can't hide the order. Again, it sounds easy, but it's hard, and I'll get to the reason why it's hard later. Okay. So an uptrend, once the supply observed by smart money, okay, when general market conditions appear favorable, the smart money can then mark up the price of the stock at some time in the future. Okay, that's what they do on an uptrend. The market breaks out from the end of the accumulation phase right here, breaks out and up, okay, with average volume. There's no rush as the insiders. Keep these terms in your head. The insiders have bought at wholesale prices. It's like the Costco's and BJ's of the market is in this range area, okay? And now want to maximize profits by building bullish momentum slowly, as the bulk of the distribution phase will be done at the top. So distribution is at the top after the buying happened, okay? Now, during the accumulation phase, I'm gonna tell you what it looks like on TV. During this accumulation phase, the news and all the talking heads are telling you how bad a stock is going to be or how bad something's going to be, and everybody's just giving their shares away to the big money. And before you know it, you don't even realize it. Look, it says it here. With average volume, it's steadily moving up. And so there's no drastic movements. It's just slowly moving up. And before you know it, so now you got this $10 stock. It went to $40. You didn't realize it till it got to about $35. At $35, the news is going to start raving about the stock. They were killing it 2 months ago. Now they're going to start raving about the stock. And when that happens, that's when they're going to start distributing. Here, you can have my supply. You can have it. You can have it. You'll see. It's funny how you can see it on the chart too. When you you got to really get your eye to seeing it too. So that's what that looks like here. If you see, let's go to here. So now this is the whole thing in progress here. It's downtrend, goes down and up, down and up, down, accumulates, and goes up, and then a markup of trend. Okay, there we go. Now let's talk about distribution. Distribution, smart money will take advantage of the higher prices obtained in the rally to take profits by beginning to sell the stock back to the uninformed traders. That's us. I won't call myself uninformed anymore, but that used to be me / investors. We are selling when we should be buying and buying when we should be selling. But again, when we hear people talk about it and you hear people that don't know what's going on, if you really put in your head, it's a market and there's markdowns and there's 50% off and there's 20% off and there's 70% off liquidations. When we start to notice stuff and know what we're looking for, you can slip up, and not even slip up. You can actually knowingly come up in the stock market. Again, it was not overnight money. It's not a get rich quick scheme. It's learning it, understanding market structure, knowing where you are, depending on time frames. Okay, let's talk about a downtrend. Once the distribution is completed, the smart money can then mark down the price of a stock at some time in the future. Okay, now let's check this one out. Okay, now look at this diagram here. This is what happens. Market goes down. If you see here, it gets oversold or accumulation. Some people know what I'm talking about, but we've been talking about accumulation tonight. So it goes down, it accumulates. It'll start rounding at the bottom. You'll see it on the chart. It'll start rounding at the bottom and it'll go up. Now, on a zigzag, if you put a zigzag pattern on, this rounding actually looks like a W. And then it goes up. When you see W's and equal lows, and it breaks through the top, then it starts going up again. Then it gets into overbought. This top on a zigzag pattern will look like a M. But on this graph here, it's rounded off and it'll come back down. The big money will distribute the money. They'll give you the shares back to you. They'll give it to you at the top and they'll sell them all the way back down to a price that makes sense at whatever, whatever the stock's doing or however, how good the company's doing. Okay. I think we're getting this over. Now, here's what, like we already saw this chart again. Mark down, accumulation, markup. Mark down, accumulation, markup. Okay. This is all the smart money is doing. They're simply playing on the emotions of the market, which are driven by two things, fear and greed. I'll give you an example of greed. They start talking about cryptocurrency and the meme coins and all that good stuff. Well, all the money was made when nobody was talking about it. The accumulation phase. Now it makes sense now if you've been listening. The accumulation phase is happening when everybody thinks it's dead in the water. Then what happens is the greed kicks in and it goes through the roof. And then people are holding on and buying at the distribution phase. People are buying it here. And then the people that got rich, the ones that became millionaires overnight with this crypto stuff, was giving it to the people who were excited. Okay. Like I said, the market is moved by fear and greed. You create enough fear and people will sell. Create enough greed and people will buy. And it's simple. And they just work it all day long. And the cycle the cycle of accumulation and distribution is repeated over and over and over again across multiple time frames. You can see it on a 1 second chart, a 30-second chart, a 1 minute chart, a 15-minute chart, and up. Hour, 4 hour, daily, weekly, monthly. You can see accumulation, you can see distribution, you can see uptrend, you can see downtrend. It doesn't stop. Okay. It doesn't stop. Now, here's another diagram. Let us first understand what a trend is. In a healthy bull market, the upswings generally exceed the downswings in length and making a higher high, as you can see. This is what a healthy market looks like, not stuff that happens out the blue, like something crashing and dramatically going up. It still respects structure, but it won't look this neat. Okay. But in a healthy market, this looks neat. This is what a market looks like. Up, down, up, down, up, down. It tries to go up again. It does not exceed this higher high. And then breaks down below this higher low, which means what? I said it earlier. It's a change in character. Okay. When it's a change in character, we now got to change our thesis and say we're selling now because it's going down. Now, do we want to sell on the break? Some people do that. Or do we want the discount prices? Wait for it to come back right here and then go down. Hard to do. Sounds easy when you're looking at it right here. But when when you start learning patience and waiting and knowing where to set your buy and sell limit orders, you can make things work. Okay. We have this actual chart here. Higher high, higher low, higher high, higher low. This is an uptrend. Okay. Keep looking at that. And from audio listeners, I'm hoping I'm making sense to where you can see it in your head as I'm talking. Okay. Trading against the trend without a trend or poor quality trends are one of the most common reasons traders fail. The quality or strong trends have more predictable success. Okay. Controlled arrangement of price bars and pullbacks provide greater certainty that reverses in supply and demand happen. Okay. Poor or weak trends have lower predictability. So a chart that looks like this is strong. You can predict this. You can kind of anticipate that it's going to go past this high and then come back somewhere between 50%, 60%, or 40%, and then go back up again. Okay. That's in a healthy market. A poor or weak trend have lower predictability. Uncontrolled arrangement of price bars, which means something happens, news comes out, somebody speaks, a bomb is set off in Russia, the bars go crazy. That messes up the chart, but it doesn't mess up the structure. That's the part we got to understand. It'll probably mess up the structure on the lower time frames, but the bigger ones like the weekly, the monthly, the daily, they'll actually hold, and you can see that. So determining the market trend, according to Dow theory, the market has three trends: primary trend, secondary trend, and short-term trend. Pretty much, and I'm gonna make this short. The primary trend is pretty much the bigger picture. Let's just say the monthly chart. The secondary trend would be the daily chart, and the short-term trend would be like the hourly chart, and they all work in tandem. Okay, so the best time frame for a trend is the bigger the time frame. It doesn't matter which one you pick, but anything from a daily time frame on, weekly, monthly, yearly, you're not gonna get that many moves on a yearly. You want a lot of moves when you're trading, so you want to go to low time frames. But if you're investing, you can put a daily chart on, look at this market structure, and find out, okay, when price gets at this point for this stock that I like, I'm gonna buy it here. Why? It's fitting structure. This is where it looks like the smart money wants to buy it. Okay. Now, let's check this diagram out. So this is primary trend, secondary trend, and short-term trend all in one. Now, the primary is this red, looks like a roller coaster. So let's just say the monthly is going down and then going up and then going down. The daily would be inside that monthly chart going up, down, 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 but it's still generally following the monthly pattern. And inside of this daily, you would have the hourly going up each one of these legs right here, up, down, up, down, up, down, up, down. Price is fractal. If you don't know what fractals are, look them up. Fractals mean it happens the same at all levels. That's not what a fractal is. It's just imagine if it's going up, down, up, down, up, down like that on the monthly, it's doing the exact same thing on the daily, the hourly, the 30-minute, the minute, the 30 seconds, doing the same thing. The difference is the lower the time frame, the more moves you have within a bigger move. Okay, so if you can kind of get the direction of the bigger move, you can catch smaller moves or really big moves from a small time frame. Okay. So here's some more examples here. So this is an example of a primary trend and a secondary trend on an actual chart. So if you see this channel here, this channel is going down in the downtrend, but there's a small uptrend here on the secondary trend. So if you know the overall picture is down, what you would do is you would somehow wait for the secondary trend to hit a level, sell here, and then ride the wave. Again, sounds easy because we're looking at it. You have to have patience for this. Here's another one here. There's a secondary trend here, a short-term trend, and a long-term trend. You see the long-term's up. There's the short-term going down against it. So the ones that's going down and back up and down and back up, the downs are the short-terms. This is where we can take advantage of both ways if we kind of know where to get in at. I don't suggest it for beginners, but if you know what you're doing and what you're looking at and know where you are overall, it's like a radar. You know where you are on the field, you know what you need to do. You can buy or sell at any time. Okay. So the ultimate objective of technical analysis is to find the location of a trend and trade according to the trend. That's all we want to do. We want to be patient. We want to wait. We want to see where the market is in structure as far as the bigger time frames. And what we're going to do before we get out of here now, for my audio listeners, you definitely got to check this part out, because what we're going to do now is we're going to actually go on, rather than these diaphragms, we're going to show you today's price. So right now we're looking at a 15-minute chart. Okay. Hold on. Why is it not sharing?
What you need, brother?
I'm trying to get this up, but it's not sharing. I'm wondering if
So let's take this one out, and then you can change the screen you want to share, and then
all
we'll
right, let
put
me
it
do
back
this.
up.
Yeah. So should I stop and then start again?
Yeah, just pick the screen you want to share, and then we can stop it, and then we can put the other one up when you're ready.
All right. And then let's see. Share screen. Here we go. There we go. All right. There we go.
All right, there we go.
My man. So this is actual price today. So like, again, I have indicators on here, and I'm using technology to actually show you the zigzags we were talking about. Now, if you're hearing these beeps, that's that's my indicators going off saying I need to look at the chart. So I'm active. I'm all the time active, as you can hear. So let's just go to let's pick from Sunday till now. And that's just 2 days. We'll start right here. So as we can see, last week we were in a downtrend. Now this is the 15-minute chart. Now for my traders, we would want to know what's going on the 15-minute. So we see the higher, or let's do this. Price breaks past this low here, breaks down, comes back up, breaks down, okay? Comes back up here, breaks down, we're still in the downtrend. Goes up, comes down, we're still in the downtrend, goes up again. Now check it out. Now this is off live charts. It's not just we're cherry picking. It goes down, but it doesn't go past this lower low, which means what? We may be in a situation where we could change character. Now, if you are a quick shooter, you can start anticipating and going, you know what? It didn't come down lower than that last low. I'm going to take a trade here. Well, that's probably not a good idea, but you could, and with minimal risk, because you could just put your stop under here. Now, what happens is it breaks above this last lower high, which means what? We actually did change character, and look what price did. Price all day. So we knew that price was going to go up this morning around 7 o'clock. We had an idea because it broke structure to the upside. So we kind of knew. Again, it's not guaranteed, but when you know what you know, and you kind of see it over and over and over and over again, you can see that we're going in an uptrend. Okay. Now, if we were to just map this out for tomorrow, which we probably could not, because this is an ongoing 24-hour market, and this is the Euro USD. Let's just go up higher in time frame, just to show something. Okay. The 1 hour says, oh, that's good. This 1 hour chart, if we've been looking and following, it's broke the last higher low. So we're in a downtrend. So what are we looking for tomorrow? We're looking for down trades on the Euro USD. The 15 minutes in an uptrend. So now, if remember what the diagrams look like, you could take the smaller trends up into a big trend, and we can ride it down for a bigger move off a smaller time frame. But it takes time and patience to even wait till it gets to that point. Okay. That's why people are now trading on these 30-second charts. I'm like, I don't know how they're doing it. I'm actually at a minute now. Never thought I would get there, but I'm at a minute chart now. So the 15's in an uptrend, the hourly is in a downtrend, but it's pulled back into this area. where it looks like I'm actually anxious to see what happens. So I wish we were getting on again next. I wish we got on Thursday morning because I can show you what happens, and it looks like it should be a sell either within here, in here, or up here. There's probably a sell that's going to happen. Don't know, but you know what I could do tonight? I can mark it, and we'll track it just in case. Not even just in case. Hold on. We'll mark it here, here, here. So these blue lines I just created, I'm thinking a price could pull back there. Okay. Let's see what the 4 hour says. The 4 hours is also in a downtrend. The daily is in an uptrend. Actually, no, sorry. I apologize. It's in a downtrend. But the daily is actually coming down, and it can reach this level here where my blue line is. So you see where the blue lines are. Now we'll go down to the 15 again. Whoever's listening, tomorrow, you can take a trade from 0865, 0872, or if it breaks below 0836, you can take this trade down, and it might go far off the small time frame. Now, let's go down to a minute. See what happens. Now, the minute is all over the place, as you can see it. Look at the zigzags. It's up and down, right? But we don't worry about that. We draw our levels from the bigger time frame, and then we take our trade from here. So you see these blue lines still. Now, right now, you just be patient. Set a little thing up here for 0865 or 0872. If your thing triggers, as you've been hearing from my computer all night, if it triggers the set, take a trade from there. And I'm talking about shorts. Shorts means it's going down. We want it to go down. This is the Euro USD. I'm not giving advice, but we just walked through market structure, and market structure says that this is trying to go down, but the 15-minute is in an uptrend. Perfect time to take a short. So just wanted to get that example of market structure. Hope you guys got what you needed. Again, I can get into this some more, but tonight, that is all I have for you guys. Again, Euro USD. I marked it, so if we come back on again, and we can go back to them spots. You can see if I know what I'm talking about or not.
My man.
Yes, sir.
Giving solid advice. I'm telling you. If you didn't have your pen and pad and paper out, you missed a lot of good nuggets. Again, those of you who are getting the audio, I highly suggest you go to our YouTube page or our Facebook page or LinkedIn and get the video portion so you guys can actually see what my man O was doing. He was actually showing visuals of what he was talking about, and then actually went to a live trading chart of his showing the Euro USD of what is possibly going to happen between now and tomorrow. So again, we're giving you guys, well, not me, Melly O, giving you guys some free tips on how to trade in the market, whether you have not as much funds or you have a lot of funds, or you're doing this on a regular basis or you're not. So we bring you guys value one way or the other. So we're not just one track minded. Everything we do is about mindset. But listen, this is another way for you to get into the market one way or the other, and to learn how to do this. Now, again, there are some more deeper things you can get into, my man O. So if you'd like to, you can always contact him via our phone line here at Friend of Mine Inc. Podcast at 302-689-3499, or you can give an email to the podcast at fofmpodcast@friendofmineinc.com. That's again fofmpodcast@friendofmineinc.com. So for all of us here at Friend of Mine Inc., continue to think and speak it and achieve it, and we will see you guys next time as we continue to bring you guys value on what's going on around the world, going on in the community, and all things positivity. Until next time, we holla.
Thank you for joining the Frame of Mind Inc. podcast. And as always, here at Frame of Mind Inc., think positive thoughts, say positive things and do positive deeds. As our tagline says, think it, speak it, achieve it. See you next time.
It's a frame of mind. It's what you say and what you do.
Don't forget to check us out on the web at www.frameofmindinc.com, where you can browse our online apparel store, listen to some of our original music and production services, as well as view our videos and projects we've done for our clients and customers.